Good evening, everyone. Welcome to another video. Today we will be discussing the basics of market profile, volume profile, and TPO. So, what exactly is a TPO market profile? So, it's just a simple tool which makes it easier to look at the financial data instead of just reading the numbers. Like we used to look at the graphs instead of the numbers. It makes us easy to look at the numbers and the relativeness between the data. What TPO does is the same thing. It just shows you it's upgraded from the candlestick. Instead of just looking at the candlesticks, it gives you a more compounded or collective view of the candles. So yeah, before we get into the charts, I want to show you. Remember this game when like we were kids, we used to play. Like there are bricks which are falling, and we have to arrange them in a way that everything is balanced, like in plane. It shouldn't reach the top by the end of the game. So like TPOs work on the same idea. It's just like the same bricks, same things, they fall on each other. If we consider this as our price and this as the time, so every 5 minutes they're releasing a block. The size depends on the price. It keeps falling. And over the period of time, or let's say a day, so this fall upon each other and it gives us a view like this in most of the days. So I will explain this on the charts, how they look and how they are formed. Okay, this is a clean template. So I will show you let's look at our normal candlestick chart. This is a BTC chart on 15 minutes time frame. Now I will so to get the TPO charts, just open your indicator template, go to technicals, and yeah, these are all the profiles available. I will be covering all this in future videos step by step in complete detail. So right now we need the TPO, time price opportunity. So yeah, just turn it on, and yeah, at first it will look like this, like I am showing you with the expanded view. So you can see it's basically the candles. Like I turned off the candle view, now I turn on the candle view, and you see it's just overlapping it. 15 minutes time frame candlesticks, and it looks the same. Like it is just overlapping the candles you already had. So let's turn off the candle view, sorry, TPO, and yeah, turned off the candle view, and let's get to settings. So period is one, like 1 day time period. So yeah, this is the block size, the time frame, and this match. That's why we were overlapping. So this can be block size is like how or like what candlestick time frame you want to pick. So this I will cover later in the detail. It's a different explanation, whole long video for this. So yeah, this thing is like split by blocks. When I turn this off, split by blocks, if you turn it off, it gives you the candlestick view. There are no wicks in this, it's just like high and low of the candlestick. So when I turn on this the split by box, you will get the profile view. This is the profile view. You can see, as I mentioned earlier, like it looks somewhat like a bell curve. This bell curve, like yeah, here you got three bell curves on the same day. Here, these are like different types of TPOs. I will be covering in future videos. As of now, you get the idea. This is just like how TPOs are formed. It's just like you pushed all the candles on one another, and now you have the full thing. Just give me a minute. Okay. Yeah, so where were we? Yeah, the candlesticks just overlapped or pushed on each other, and we have this thing. Same like the game we used to play as kids. It's the same thing. And yeah, there are a few advantages of it. I will show you a quick view. Yeah, this is a gradient curve. Like, yeah, this helps you look at the TPO in an easy format. So you can see like the first is the pink one, starts with the pink, then turns green, then blue, then purple. It shows you the time period of the day. Like it's super easy when you look at uh, this way, like color scheme, like morning session, afternoon, then evening, then night session. Like it gives you a clear view. If you are trading Nifty, you can do for the first 1 hour or like first 2 hours, then afternoon, then the evening session. So it gives you like where the more volatility is coming. Like if pink is moving way too high, you can say like morning is volatile. So like instead of just looking at the candles, then hovering over the time, it gives you a quick view of everything at one place. You don't have to switch time frames and stuff. So like it's a quick view, like everything in on one screen. That's the biggest advantage of profiles. I will discuss on more importance of profiles. Yeah, so there are different things here. The value area, I will come back to this. Okay. So yeah, so the whole idea is built upon this value area, or let's say the bell curve thing. So the bell curve is like it looks like this like bell curve, like more volume or look more data at the center. So it's an idea like most of the average things are like more. And yeah, things are falling apart from that are less. Like you can take example of like height. Like if you take 1,000 people as a sample and gather their heights in a sample space and calculate the average. Average might come between, let's just say, 5.5 feet. And yeah, the first standard deviation, like most people's heights, is around like 5 to 6 feet. So that's like the first standard deviation, like half feet above and half feet below from the median is like the average height of the 1,000 people. And like you will see like many few people are below the height of 7 feet and a few people are below the height of 4 feet. So like those are the extremes. So what the most people height is between like 5 to 6. So that's like first standard deviation. So like yeah, it's basic mathematics we all learned in the school. Like find the mean, then standard deviation by one, standard deviation by two and three. Like basic mathematics, school mathematics. So this can be used everywhere, like even our IQs or like the performances. Like yeah, meet expectation. Like most of the people meet expectation, like not to above average, not to below average. Like yeah, we meet expectation. Like that's first standard deviation. It comes around like 68%. We can roughly consider it like 70%. So yeah, so these are like underperformance less than 10%. Yeah, less than 2%. You can see it. And like excellent performers are less too. The idea is like be like less productive or extreme productive, you get the same results, or be like average. This can see like as I like discussed already in my previous video, markets are just representation of human nature and human behavior. And it all comes back to the same thing, human nature and human behavior. So it's like low IQ or high IQ, they all come back to the same conclusions in the market. IQ people tend to simplify the market to the most extreme, and they make a good result. They make good results in the market. And the most excellent or high IQ folks like study everything. They be the quants, analyze everything, and they conclude like it's simple, and they conclude the same results. So most of the probes lie like when people are caught up between like they want to keep it simple, also they want to complicate its system. It's like everything in life works that way. Life is at the edges, be it extremes, like extremes. So yeah, talks about that. Yeah, what like yeah. First we need to understand volume profile or market profile. First we need to understand what price is. Price is just advertisement mechanism. Let's just say you go to a shopping mall, you see a 50% discount. Yeah, so you see, how do you know it's a discount? Because price is getting advertised at a 50% discount. Same thing, like how do you know it's a discount? Because you know, like it's put there, or like you already know, most of the days it's sold at an average price, and it's like below that, so it's discount. Some days it's like above this, you call it a premium. You tend to sell it, like buy at a discount, sell at a premium. That's the idea. So price is just advertising, and profile does is like help you understand what's the fair value. Like most of the days it's selling in the middle, so that's the fair value. And if it gets below, you buy. If it gets above, you sell. That's trading around fair value. So the like price is just advertising. Price doesn't do anything on its own. So yeah, time limits of price advertise opportunities, time limits. Sorry, yeah, time limits all opportunities. So like when something goes on a discount, if more people aren't, yeah. So like, how do you know it's a discount? Like they give like 50% discount till the end of this weekend. Yeah. So that's the way like you like time is limiting the discount or the premium. So yeah, if you want to see in the market terms, it's like how fast price is getting rejected from the discounts or rejected from the premiums. That's one way. Like time is limiting the opportunities. You don't have much time to react at the edges and the bottoms. Like all time high, you can short it. Like if you see people getting interested, yeah, it will fall down. Like if Yes, yeah, we will discuss like volume. Volume confirms or reject. The same thing I was telling you. If price is at all-time high and if there is a like drop in volume, there aren't buyers interested. So yeah, what is the outcome? Like usually we will follow. So this is why it said like volume confirms or rejects all opportunities. If it's at all-time high, and like if people are still buying, so volume is confirming that we are getting accepted and people are still interested. It's not that it's not at that premium. We will go for the premium higher. So price is just advertising. Time is limiting the opportunity, and volume is confirming. So either we will reject or we will come back. So there are multiple strategies reading all these three. It's all using all these three. It gives you such a framework that you don't need any other thing. Like just market reading. So hope this point is clear because everything on TPO, order flow, market profile, or tape reading, everything revolves around this idea. Price advertise all opportunities, time limits all opportunities, volume confirms or rejects all opportunities. These three used together is just game changer for any like it was for me. So things to note like initial balance, poor high, poor low, ledge, POC, single prints. Yeah, these are some terms which I will be covering in detail in future videos. But right now I will give an overview how to spot this and like what exactly these are. Initial balance is nothing but the first 1 hour or 2 hour, depends on the strategy. I prefer 1 hour of the first session of the trading. Poor high, poor low. I will explain this on the chart, that will be more clear. Okay, I will cover all this on the charts. So this is basically our TPO in the split block view. Okay, so all the settings are available here. I will make another video how to set it up, but yeah, I will just give you a brief overview. POC is the point of control. It means where most of the volume took place. As on the bell curve, I showed you what's the average or the middle curve or the fair value, the midpoint where most of the action took place. Or in terms of TPO, it's like the time. So like where most of the uh, time was spent during the market hours. So like yeah, TPO shows you that. In terms of volume profile, if volume profile is showing you POC, it means that where most of the volume took place, that most of the orders or most of the interaction has happened. So you can turn this off, and if you want to trade it, you can just like extend it, poor high and poor low. This is very interesting and very important to be trading TPOs. Poor and high and poor lows means like uh, the points where like price has spent more time. Like I told you, like time limits opportunities. So if price is getting making a poor high or poor low, it means like it is getting accepted. So and time, like yeah, price is staying there, so more people are getting interested and it's not limited. So yeah, so the idea of trading that would be like it becomes a magnet sort of thing. Price will revisit as like when price is going on a discount and it's attracting more participants. So yeah, if something fails, we will come back to this. I have covered this why this works in my liquidity video. Might want to check that. I will show you how this looks. Like told you, like these are the two TPOs. Like yeah, we spent too much time there, so that's why we have this. If we turn off this and like yeah, let's turn both on. Yeah, okay, my bad. Yeah, the same thing. The two TPOs. This is like a poor high. So here, like prime price, I spend more time in terms of like some SMC concept or like price action. This is like yeah, double top. So double top gets usually revisited, and some say it's like the presence of liquidity and all that stuff. So you get the idea. Like in one view, without looking at the candle, you get this whole view, or like what's happening and what are the conditions of the market, poor high, poor lows, like where it could be revisited, all that stuff. So another is like value areas. Value areas, like I showed you, per standard deviation. You have to define like what percentage should be. It comes around 68%. Yeah, it's a general view, like standard deviation comes around like 68%. But if you sit and calculate the numbers, it comes out to be different. But you get the idea, like most of the cases, it's around 68%. Poor high, poor low, I covered that. Single prints. Single print are nothing but the fair value gaps. Single prints are where like price didn't spend time at all. It's like, yeah, something went on a discount and people got carried away and they never stopped. So it's like strong buying pressure or strong selling pressure at that point. There's a difference. There are different strategies how to trade this. Price never stayed here. Price continuously moved. These are the fair. Like you can trade them the same way you trade fair value gaps. So the single prints are just like single prints. One TPO, single print. So these are basically just fair value gaps, but of the whole day, where time like price didn't stay at all. Value area high and low, same thing. Standard deviation higher and lower. TPO midpoint is the midpoint of the whole session. TPO mid open and close or open and close. Initial balance first 1 hour of the candle, 1 hour of the session. So like this is my Nifty chart. It's Nifty, right? Keep the charts clean. So if we turn on the TPO chart here, so you see this black line here nearby. So this is my initial balance. It indicates the first 1 hour of the session. If you split by block, it will give you a clearer view. Like first one, 15 minutes per block. So it should come around this like yeah, initial balance. That's it. So initial balance is like first 1 hour. Like usually we know like first 1 hour is where most of the volume takes place. So marking it out helps a lot. So it's like visual representation of everything in at one glance. Like as a trader, we all need information at our access so we can make better decisions. So once you get all the things you need on the one screen, it all the time you can spend on the screen is just to make the decisions. And that's it for the TPOs. Let me check. Are we missing anything? Yeah, visually need charts like they are not messy, mechanical. Yeah, the main advantage of TPO is like they are so mechanical. The same levels I am marking, you will get the same levels. Like there is no creativity. What's a single print for me is a single print for you. What's a poor high for me is a poor high for you. What's initial balance for me, it's an initial balance for you. It's like very transferable skill. If I get If I'm sharing my charts with you, you will get the exact information uh, which I'm trying to share with you. It's not like someone is marking some levels and we have no clue why they are marking it. But when it comes to TPO, we will get the same levels. If we aren't getting the same levels, like, yeah, there must be something wrong with the settings or how we've set it up. But the idea is like it's so mechanical, less amount of creativity. It's very transferable, easy to explain. Like I said, like if I'm sharing plain charts with you, you can look at it. It's so easy. Like everything is at one glance. Yeah, there's one more thing. What platforms you can use for this? Yeah, there are multiple platforms available. So yeah, there are some advantages of using different platforms. This is Go charting. Like yeah, I prefer Go charting over trading view when it comes to like index trading. Because like you get both this like delta volume and TPO at the same place. And you can also filter it like how you want it, like dailies. I can hide dailies and start my sorry, this is my weekly TPOs. So it's like everything is under one screen and that makes things easier. So you can also get the statistics of the day, like number of TPOs. It indicates the volatility of the day. If it's way too low, like yeah, it's like flat market or like there wasn't any much move. Or like low volume days, like yeah, you can hardly trade on those days. So like everything at one place. TPO helps you find so many things. That's the advantage. In coming videos, I will be covering everything in detail, like single prints, poor high, poor lows, how to trade them, like how to generate a plan using them. There are multiple ways you can do. There's like so much scope to improve on this. Like even if you are trading a 24 hours market, you can split them into sessions, Tokyo, London, and New York. And this gives you the overall view in one screen, like what's exactly happening and how is price reacting to certain places. And also you can set it up all under the same screen when you if you are using trading view, like your daily charts, your weekly, your monthly, and yeah, one brief view of candlesticks. So that's it for today. I will be covering everything step by step in all those videos. Especially I will be covering all these types of TPOs, and this all have different use cases. It depends on how you want to use it and or what information you want to see. So do subscribe, like, and share. See you in the next video.